Hey there, everyone. Welcome back to the channel, where we dive into the numbers, trends, and forecasts shaping the financial markets. It's Friday, November 22nd, 2024, and what a day it's been for the US stock market. Whether you're trading full-time or just keeping tabs on your investments, today's recap and Monday's forecast will keep you ahead of the game. Alright, let's break down the day. The major indices wrapped up the week with a mix of resilience and caution. The S&P 500 closed up 0.3%, finishing at 4,735 points. Tech-heavy Nasdaq, though, stole the spotlight, climbing 0.8% to hit 15,200, a level it hasn't touched since early October. Meanwhile, the Dow Jones Industrial Average lagged, dipping slightly by 0.1% to 35,850. So, what's driving these movements? Let's start with tech stocks. Apple, Microsoft, and NVIDIA were the big winners today. NVIDIA surged nearly 5% after posting stellar earnings that exceeded Wall Street expectations. They're benefiting from robust AI chip demand and strong cloud infrastructure sales. On the flip side, industrials and financials faced some headwinds. JP Morgan and Goldman Sachs both slid by about 1%, largely due to concerns about rising bond yields and their impact on profitability. And don't forget to factor in the international scene. Weakening PMI data from Europe and ongoing uncertainty in the Chinese economy have global investors treading lightly. Despite these concerns, the U.S. markets are standing strong, bolstered by encouraging retail sales data and moderating inflation. Let's drill down into the sectors. The energy sector had a tough day, sliding nearly 1% as oil prices dipped below $80 a barrel for the first time in 2 weeks. This drop came amid a stronger dollar and higher U.S. crude inventories. Meanwhile, healthcare stocks turned in a solid performance. United Health Group climbed 2.5% after positive updates about Medicare expansion, and Pfizer gained ground following progress in their RSV vaccine rollout. On the flip side, retail stocks had mixed results as holiday shopping season approaches. Target rebounded after last week's earnings scare, but Macy's dropped 3%, reflecting weaker-than-expected foot traffic projections. Alright, so what's next as we head into Monday? All eyes will be on the Federal Reserve meeting minutes due for release over the weekend. Investors will be scouring for any signs of shifts in monetary policy. With inflation showing signs of cooling, there's growing speculation that the Fed may ease up on rate hikes earlier than expected. Additionally, Monday's economic calendar includes housing market data. Analysts are anticipating a slowdown in home sales as higher mortgage rates continue to weigh on buyers. From a sector perspective, tech stocks might maintain their upward momentum, particularly if the semiconductor rally continues. However, be cautious. Next week brings several earnings reports from smaller tech firms, and any weak guidance could shake investor confidence. Now, let's talk strategy. If you're trading on Monday, keep an eye on the VIX, also known as the Fear Index. It's been hovering around 14, signaling relatively low volatility, but don't get too comfortable. Any surprises in the Fed's tone or macroeconomic data could trigger sudden shifts. Also, consider defensive plays in utilities and consumer staples. These sectors could be safe bets if the broader market faces turbulence. And for the options traders out there, premiums on puts for major indices are looking attractive right now, especially if you're hedging against downside risk. To wrap things up, today's market performance shows that investors are cautiously optimistic. With earnings season winding down and the Fed back in the spotlight, next week promises plenty of action. If you found this recap helpful, hit that like button and subscribe for daily updates to keep you informed and prepared. Thanks for tuning in, and I'll see you Monday morning to kick off another trading week. Until then, trade smart and stay informed.